What happens if I owe more on my car than it's worth when totaled? Have you ever wondered what happens if your car gets totaled and you owe more on it than it's worth? This situation can be quite stressful, but understanding the details can help you navigate it. When your car is declared a total loss, it means the damage is so severe that repairing it is not financially sensible. In this case, your auto insurance will typically pay you the actual cash value of the vehicle at the time of the accident. This value takes into account depreciation, which means it is often less than what you originally paid or what you still owe on your auto loan. Let's say you owe $25,000 on your car loan, but your insurance company values your totaled vehicle at $20,000. After your insurance payout, you would still owe $5,000 on your loan. This means you are responsible for paying that remaining balance out of your own pocket, even though you no longer have the vehicle. This scenario is common because cars lose value quickly. In fact, many vehicles can lose 20% or more of their value within the first year. Meanwhile, your loan balance might not decrease as quickly, especially if you made a small down payment or have a long loan term. To protect yourself from this financial gap, consider purchasing gap insurance. Gap insurance is optional coverage that pays the difference between the car's actual cash value and what you still owe on your loan or lease. In our earlier example, if you had gap insurance, it would cover that $5,000 gap, minus any deductible. This means you would not owe anything extra out of pocket to your lender. Keep in mind that gap insurance only applies if your car is stolen or declared a total loss. To qualify for gap insurance, you usually need to have comprehensive and collision coverage on your policy. You can often get gap insurance from car dealers or your auto insurer, with insurers typically charging less. Gap insurance is especially recommended if you made a small down payment, have a long loan term, or your vehicle depreciates faster than you paid on the loan. Without gap insurance, you remain responsible for paying off the loan balance even after the insurance payout for the totaled car. Some insurers also offer loan or lease payoff coverage, which is similar to gap insurance but may have payout limits based on the vehicle's value. So, if you find yourself in a situation where you owe more on your car than it's worth when it's totaled, remember that your standard auto insurance will only cover the depreciated value. You will need to cover any remaining loan balance unless you have gap insurance to bridge that gap. Gap insurance can provide you with the financial protection you need, ensuring you do not owe money on a car you no longer possess.